Now, the interesting thing is with your investing, and this is where people stuff themselves up, quite frankly, often. What they'll do in the early days is they will chase cash in relation to their investing. Because most of us, that's how we've always made our money, isn't it? We've received it from our income or from our job, from our business. But business people especially are real funny about cash flow. You talk about cash flow, they go, oh, business people, it's all about cash flow, cash flow, cash flow. And the interesting thing about that is that if you focus with your investing on investments that will deliver you a lot of cash flow, often it's a result of then having very little growth or a lot less growth. However, growth type assets, you'll tend to suffer a little bit with the cash flow aspect of it. And it's like two generally don't go together. There's a weakness with both. Okay? There's a weakness in both sections. But you, because most of us are fit and healthy and doing reasonably well, it's very important in the early stages that we build up a lot of the growth type assets. Because if we can build up growth assets, it's a lot easier in years to come to turn an asset into cash than it is to turn cash back into an asset. Think about that for a moment. It's a lot easier to turn an asset into cash than it is to turn cash back into an asset. So you've got to watch that.